Welcome to Morning Brief. I'm Julie Hyman. Let's get to the three things you need to know today. Volatile action in the commodity space rippling across markets. Silver reversing overnight declines and now trading higher following Friday's 30% rout. That was the worst one-day drop for silver since 1980. And in oil, prices slumping more than 4% as President Trump signals de-escalation with Iran. This all pointing to weakness when the market opens as earnings and the tech trade also loom over investors. The big earnings report ahead of the open. Disney, the entertainment giant, posting better than expected first quarter results driven by the parks and cruise business, which is led by one of the top candidates to succeed CEO Bob Iger. That decision could be coming this week. And Oracle raising another $50 billion for its AI build-out and even more concerns for shareholders. The software giant wants more capacity for its infrastructure business to meet the demand it has for customers, including NVIDIA, Meta, OpenAI, and more. Let's get a check in on stock futures right now. We are seeing a mixed picture right now. The Dow futures indicating a very, very slightly higher open. S&P futures off about 0.33%, and NASDAQ 100 futures are indicating a drop of about 0.5% right now. So a lot to consider this morning. We've got Disney shares falling despite the company reporting sales and profit that beat Wall Street estimates. Aside from those results, investors are watching the company's succession plans. According to reports, Disney close to promoting its theme parks head Josh tomorrow to replace CEO Bob Iger, who plans to step down this year. To talk about that and much more, Nancy Tengler is joining me now, Laffer Tengler Investments CEO and CIO. Nancy, it is great to see you. I hope you're doing well. We've got a lot to talk about this morning, but I do want to touch on Disney. You don't own the stock, and I'm wondering what it would take to change your mind on that. What would draw you in to those Disney shares?
Good morning, Julie. We've owned it in the past, and we exited post-COVID. Recall it had a big run-up due to streaming, but then the parks had a problem, and then there was questions around ESPN and ABC. And so the company could get one thing very right, but if the other three major areas of the business weren't coming along, it wasn't showing up in the stock price. So it's not that we don't love the brand or think that Disney is a great company overall. We just felt like there were better places to be. And I think this CEO announcement will clarify our thoughts about the future. And we'll probably wait a little bit if we do determine to get back in, let the stock settle, and then hold it again for a long-term period.
Does the leadership change, would that be a step in the right direction?
I do think so, Julie. I mean, at some point, three's a charm, and we had the same issue at Starbucks with Howard Schultz. Ultimately, the founder or traditionally identified leader, which is obviously the case with Bob Iger, they do need to move on and allow next gen to really drive future growth. And so I think Disney's done a great job of staying out of the political mix in recent years. And I think if that continues and we get tomorrow, that will be a good CEO swap for the long term.
So, Nancy, I want to zoom out a little bit, talk a little bit more macro, but also through the lens of the metals and the action that we've been seeing lately, which is wild by any asset standards. I saw one measure this morning that said gold's been as volatile as Bitcoin, which is just bizarro world that we're in right now. What do you make of those moves, which I know are, some of it's technical, some of it has to do with liquidity, but, what is your takeaway from watching what's going on there?
Well, one of the reasons we're not big investors, we do own the metals in our macro cycle opportunity strategy, which is one that's focused on next generation technologies that will change the way we live. So space, robotics, et cetera. We own them in there, but we don't own gold and silver. And though we have a digital asset strategy that was on demand from our clients, we really want to have a way to value what we own. And it's very difficult to value gold and silver outside of the demand question. And so you had central banks sort of starting this movement, and then you had the retail investor jumping in, and now you've probably got the hedge funds selling the metals. And I think it's just a good time to sit on the sidelines. If they pull back further, I don't think it's a bad long-term investment, but I prefer to be, in something where I'm owning a piece of the company and I know what I'm paying for it through earnings.
I'm curious, Nancy, if you share any of the concerns that seem to have driven at least some of the buying that we had been seeing with metals, right? And some of that has to do with inflation concerns. Some of it has to do with concerns about the long-term value of the US dollar, things like that. Do you share some of those concerns? And if so, are you hedging it in other ways?
Well, I think, the dollar is still the world's reserve currency. So I understand it's weaker. I understand the president thinks it's a good idea to have a weak dollar. We don't agree with that. But I do think you'd have to be pretty pessimistic to believe that gold is the only investment you can own from a defense standpoint. So we were broadening out our portfolios over a year ago, and that's how we've been able to, both our value and growth strategies dramatically outperformed the S&P last year. So you have to be thinking ahead. I would just stay away from this trade because it turned into a momentum trade. And there wasn't anyone that could really explain why they thought it was going up so much. So I would move aside and wait for things to settle. And then if you want to own gold again, you step back in then. But these swings in these sort of safe haven investments are a little bit disturbing.
Nancy, so let's then get back to something that you can get your arms around and that you guys do own, and that's technology. Yep. And of course, there's also some speculation on top of those names at times as well. Kind of where are we in the AI trade? It feels like we're in a new phase, a more skeptical phase, although we had little bursts of that last year. But this year it feels like that's kind of settled in a little bit more.
Yeah, I think you're right, Julie. And I actually think that's good news because if there wasn't skepticism, you really could make a case for a bubble. And so the question now becomes, is software dead? Is the AI adoption going to make money? We listen to every company earnings call, and names we own and some names we don't own. So across economic sectors, and we are seeing that the adoption of AI is pretty robust from companies. The spending is still very low as a percentage of their total tech budget. So we think we're still early innings, but that doesn't mean the stocks are going to go straight up. They had a nice run last year. One of the names we added last year was Google, which reports this week, as you know. Well, actually, we added it in the summer of 2024 when the valuation was moribund. And, that turned out to be a good decision for us in our value portfolio, believe it or not. And you might recall it was in the Russell 1000 Value Index. So you just have to sit tight, pick your spots, and then really challenge the conventional wisdom. IBM reported last week their software business is growing at a rapid clip. They're seeing increasing interest in their software business in terms of, platform, cloud, orchestration. So we think there's some opportunities in names that have gotten beaten up where you can step in if you have a 3 to 5 year time horizon.
Well, speaking of names that have gotten beaten up more recently, but which have still gone way up over the past year, Palantir, which is reporting after the close, and which is a controversial stock, to say the least, in no small part because of its, forget about the fundamentals and what it does, because of its valuation, it's also controversial, Nancy. Is that one that you guys own, and what are you looking for from those numbers?
We do own it, and I think what we've observed, all of us investors, is that if you step back and look at the company 3 years ago, it was sort of top secret, didn't really know who the clients were or the end customer. Now what you're seeing is a much more public defense posture, and the U.S. Army just made an announcement that the business, they're going to center their platform on Palantir. And so I think with an increased interest in defense names, this is one that you want to own it. You just don't want it to be the largest holding in your portfolio because it is so volatile and because the valuation is so lofty. But, I've used this example with you before. The question always becomes, in a stock like Amazon that had no earnings for many years, Palantir was in a similar position. When was it too late to buy Amazon? The thing's up 175,000% since its IPO. So if you're buying transformative technology companies, you want to use volatility as your friend. We were buying Palantir at $88 a share last spring during the tariff tantrum. So you get the volatility, And that can be an opportunity if you're a long-term investor. So we're going to be watching for guidance. I mean, that's really the most important thing in this earnings season is what do these companies expect for 2026?
Nancy, I think the question that you just mentioned that you said that we've talked about before, I think is one of the most important questions for investors who are looking at technology, which is, yes, the upside can be, if not unlimited, very large if it is a transformative technology. I guess the trick is figuring out if it's a transformative technology. So how do you do that? How do you know with a fair degree of certainty that it does rise to that level?
Well, we spend a lot of time looking at management and understanding the management team. Think of it as a quarterback on a football team. We want the very best CEOs because they have the ability to pivot and manage expectations correctly and also market the company. So if you think about an Elon Musk who's long on hyperbole, maybe a little bit short on timing of his, meeting his time horizons, but he's still a transformative CEO who is focused on the future. We own Tesla. I don't think you can own enough Tesla, but Palantir is another one of those names, sort of an outspoken CEO. He is the company in many people's eyes. And so, that can drive volatility as well. But rest assured, Julie, we don't get them all right. I mean, one of our 12 best ideas is ServiceNow, and it just hasn't felt very best idea-ish. But I do think the CEO is outstanding. We have added to it on weakness, and we will continue to do so.
Sometimes you just got to wait a little longer to see if it works out, Nancy. Great to see you. Thank you so much.
Thanks, Julie.
Coming up on Morning Brief, we'll bring you today's top trending tickers, count you down to the opening bell. We'll be right back. Now time for some of today's trending tickers. We are watching Devon and Coterra Energy, Oracle, and crypto stocks. Markets and data editor Jared Blickery is joining me now. And first up, we got a deal in the energy space, Devon Energy.
Merger Monday.
Merger Monday here. So Devon buying Coterra in an all-stock deal here. It's valued at $21.4 billion. It's always interesting when you've got the backdrop of a big oil deal, oil prices going down. But hey, sometimes that's the breaks.
Yeah, I mean, both stocks are going down right now. You might expect Devon to go down and maybe the other one up a little bit. But nevertheless, let's highlight some of the deal terms here. We got all-stock merger, $58 billion combined enterprise value. And the exchange ratio is going to be 0.7 Devon shares per each Coterra share, and Devon owners are going to end up with 54% of the combined company. What you're looking there at on the Wi-Fi Interactive is a one-year chart of Devon Energy. You can see it's down 2% in the extended morning market, and it's up about 14%. Just recently climbed out of this long trading range. I'll give you a 5-year look too, and you can see it's been trending down. A lot of energy stocks are pretty sideways trading, and that's because they pay a lot in dividends, and so you don't necessarily see that reflected in the stock price. But their energy companies are expected by investors to return cash to them, and that can be through buybacks and also those dividends that I was talking about. A couple more details. Leadership, Devon CEO Clay Gasper is going to run the whole operation, and Tom Jordan, who's the Coterra CEO, is going to become the non-executive chair. Headquarters will be in Houston with a big presence in Oklahoma City.
Yeah, and part of what's going on here in the shale patch, as it were, shale patches, I guess, around the country, is they've gotten really tapped out. And so it's more expensive in certain cases. You need better technology. So the big boys like an Exxon have that capability. And it looks like here Devon looking to get bigger, to have a little more leverage to then get that last remaining stuff out of the ground.
And so I would expect more of this because the shale situation it's very capital intensive in the first place. As you said, they're getting tapped out, so it's becoming even more capital intensive. You need scale here and you need synergies, and so that's what this deal is about. Coterra is big in the gas-heavy Marcellus region, plus the Permian. Devon is big in the Delaware Basin, which is West Texas, and they go all the way up to North Dakota. So we'll see how this shakes out. as I said, both stocks are down a little bit in the pre-market, but also oil's down 4%.
Right.
So that could just be weighing on the entire sector.
Yes, definitely that is a factor. All right, let's talk about Oracle, shall we? The stock is erasing early declines. It has been pointing a little bit higher after the company said it's going to raise up to $50 billion for its AI infrastructure build out. And it also actually kicked off a bond offering. So it said it was going to raise this money and then started to raise the money. It's an 8-part US dollar bond offering.
Yes, and what I think is really interesting is that Oracle is up in the pre-market. It's up about 3.5%, and this is coming after the news that the shareholders are going to get diluted. So what does that tell me is that it could have been worse. Maybe there was kind of built into the stock price expectations that they would have to do this in a different way. But I mean, nevertheless, this is a huge amount of money. $20 billion, that's not, $20 billion is going to be an at-the-money equity program. That's where they just sell into the market. And so that's just that. A lot of times when companies announce that, you will see the stock go down. We've seen that in strategy, that Bitcoin play. Sometimes that has happened. So $50 billion is nothing to sneeze at. But Oracle also is kind of my bellwether for the entire AI trade, because all the hyperscalers have so much cash that they're dealing with. They don't have the same problems as Oracle. They don't have to go to the market yet to do this, although we've seen Meta tap the debt markets through Blue Owl. But that's a separate story. I want to show you this chart here. I'm getting ahead of myself. 1-year chart on Oracle. The stock is down 2/3 from that high. And at those highs, remember we were getting those headlines, Larry Oracle is the wealthiest man in the world right now. Oracle it's a huge, for me, it's canary in the coal mine, because if Oracle cannot figure out how to make this work, make all the numbers work, especially with their heavy reliance on OpenAI, which doesn't seem to have a moat anymore, what does that say about the hyperscalers? Eventually, the rubber has to meet the road, and the hyperscalers are going to have to tap the debt markets in a big way too, or just pivot.
We'll see. Yeah. All right. Let's talk about crypto for a second here, because we're watching crypto stocks, key names, including Strategy, Coinbase, Robinhood. They're all under pressure ahead of the open. Bitcoin was trading below 80,000, even though it is catching a little bit of bid today. But these guys are going down big. I just saw Strategy's latest Bitcoin buy, 855 Bitcoin for an average purchase price of $87,974. It made those purchases January 26th. To February 1st.
Yeah, well, that's in the red right now. Of course, they dollar cost average, don't they?
Yes.
Let's go to the charts, because I've been waiting for $75,000 for months, at least to get tagged, and that's what happened today. So this is a 3-year chart. First, technically, it has broken this long-term downtrend line or uptrend line, and so this is in a short and medium term and almost on the verge of a long-term, I don't want to say bear market, but downtrend. But I want to point something else out. At the $75,000 level, we get the highs from 2024, we get the lows from 2025, and that is just a huge level that was screaming to be hit.
So what does that mean then?
So
what happens when it hits it, if it hits it?
Yeah, so exactly. So we saw, let me just give you the 5-day look. So we saw a bit of a bounce off of that. I would like to see a much larger bounce. In light of what happened with precious metals on Friday, I think there was margin calls. And so when you get margin calls, you got to sell everything. And so I'm not surprised if there were margin calls where Bitcoin was kind of, either sold or pledged as collateral. But I would like to see more of a reaction off this level. What could also happen is, I'm going to go back to a 3-year chart. We could come below this. We could go all the way to 70,000. But if we go there, I want to see a quick rise above 75 again, and then 80. And that will be the washout of the week longs. And then we can get started again. If it starts spending time below 75,000, watch out. That's a crypto winter right there.
All right. Good, useful information there from our Garrett Blickry. Appreciate it. We're going to keep talking about Bitcoin now, because this sell-off in Bitcoin coming as crypto executives and banking chiefs are gearing up to meet at the White House today. The administration is hoping to revive talks over new U.S. crypto legislation, and Yahoo Finance's David Hollerith is with me now to talk more about that. Now, this regulation, right, that we've been talking about now for a little while would sort of, it's the pipes is how some have described it around crypto, how crypto is traded, put some regulation and some clarity around all of that. What's the holdup? Why hasn't it gotten passed yet?
Yeah, I mean, I think that there are a number of reasons, but recently the biggest has been this question of stablecoin interest payments by third-party crypto firms. So in the actual stablecoin legislation that the president passed last summer, stablecoin issuers they weren't allowed to give customers interest on their balances. But third-party crypto platforms still could. Or at least it's a legally gray area at this point. It's not written in the law. And so what has been going on is the banking industry and the crypto industry have been kind of at odds about this, about whether or not that should be settled in this larger piece of legislation that's currently making its way in Congress. Not really so much right now, it's kind of stalled, but that's kind of the key issue. And that really came to a head in recent weeks. We saw actually Coinbase's CEO, Brian Armstrong, reject a draft of this most recent bill, and it had to do with, one, interest payments on stablecoins, but also some other topics like how tokenizing stocks should work, also foreign actors, anti-money laundering things. All those issues are in play, but really the banking interest on whether or not to pay interest on stablecoin reserves is really the one that has come to the forefront, And as far as the White House event today, it's actually not going to be the banking chiefs. Coinbase's CEO or VP of policy will be there, but outside of that, it's mostly going to be crypto and bank trade groups that are going to be meeting this afternoon.
So does that move the needle then, if it's not the executives, the ones who really have been at odds about this?
Yeah, that's a good question. And I think the understanding is that nothing is going to be finally solved today, but it kind of begins discussions where the White House is there mediating sort of both industry positions. And I think that there are some ideas about maybe how crypto platforms could offer interest on stablecoins without, doing something that for the banking, from the banking industry's point of view, is sort of like what they do, a bank-like product. So I can also lay out the arguments for and against too.
Okay, so do that super quickly.
So effectively, the banking industry says we are heavily regulated, and to offer a product like this, which is something like a high yield savings account, you need to be as regulated as us. Now, the crypto industry, Armstrong has sort of been the one who's been spearheading this, at least publicly vocalizing it. It says, no, consumers deserve a choice. And also for the sake of innovation, this should be permitted in a way that works. And so on the one side, the banking industry sort of says this is regulatory arbitrage. On the other side, the crypto industry, Armstrong, Coinbase, crypto exchanges specifically are saying this is regulatory capture. So that's kind of the crux of the debate.
All right, we'll see who wins. Or maybe everybody wins and they come to a compromise of some kind. We shall see. Thanks, Dave. Appreciate it. Coming up on Yahoo Finance Opening Bid, executive editor Brian Sozzi helming that program. Soz, what's coming up today?
Everybody wins, Julie. You win, I win, investors win.
What could be better than that?
Nothing could be better than that. So we're going to dive into some XAI, SpaceX news, two new CEOs atop Walmart and Target. They start officially today. And then Fifth Third Bancorp closing on its $11 billion deal for Comerica. Got CEO Tim Spence in the house, Julie.
Looking forward to all that. Thanks, Soz. Much more coming up. Opening Bid is next.